So our token is basically going to be a very simple and easy way to get exposure to oil that doesn't have a lot of the costs and frictions that you do as an industrial trader. You can just put in your crypto account in your wallet. You can sit on it for 10 years and you know it's going to be worth the price of oil in 10 years. You don't have to, and it doesn't have a lot of management fees or frictions to say roll futures and things like that. It's better beta. We call it better beta.
Welcome to the Energy Desk, a podcast from Mobius Risk Group. In this series, we break down the macro forces and fundamental trends shaping global energy markets. We cover everything from geopolitics and policy to supply, demand, and the price risks that we're watching behind the scenes. Each episode is designed to cut through the noise and give you clear, actual insight into what's driving today's energy landscape and what it means for what comes next. You can follow the show wherever you get your podcasts. You can share feedback or ask questions by emailing podcast@mobiusriskgroup.com. Let's get started. All right, welcome back to the Energy Desk. And today, very excited to welcome Wil Harris of Energy Substantiation, or NSUB for short, to talk about the tokenization of WTI and energy commodities in general and all of the things that means in 2026. Excited to talk to you, Wil. How's it going in your world out in California?
Great, Alex. Great to be here. Everything is good. It's all good. I was in Texas last week and back to California this week. So basically the two fronts of our business, energy and tech. So we're, shuttling back and forth.
Yeah, absolutely. Well, we got a chance to chat briefly last week and had some technical trouble. So sitting down again, but I think it'll be worthwhile. So I think, starting out, it would be probably good for the listeners, both on the investor side and the producer side, just to get kind of a better idea of what exactly we're talking about today, because I think that can be kind of a confusing topic for some, blends across the cryptocurrency versus just the tokenization of commodities. And so it'd be, I think, great to hear a little bit background of you, Energy Substantiation, and I think the tokenization side of what we're discussing today.
We're building the definitive platform for tokenization of flowing energy commodities. So that really means today oil and gas, and then we'll then expand into other commodities like power and other forms of hydrocarbons. There are some tokens out there, quite a few now growing commodity tokens in the metal space, and there really hasn't been a lot of development on the energy space. And obviously, oil and gold are the two largest commodities in the world. Gold is fairly far along in tokenization of the commodity, and oil, again, we've now launched WTI Coin, which is going to be the first flowing oil commodity that'll be tradable in the world today. So basically, we buy oil and gas from oil companies, producers, midstream, downstream companies. Then you attach that oil through our sort of IP and innovations of the company to then issue a token that is one-to-one backed by that commodity.
Yeah, I think the tokenization aspect has been kind of growing into the daily conversation in 2026 due to, in many parts, the Genius Act and some of the regulatory frameworks that have come about last year. And there's still some developing with the clarity side of that as well. But for the Genius Act, maybe discuss what that means for the industry and really why that is an important kind of step change or inflection point for tokenization going forward.
Great. That's a great question, Alex. The Genius Act was signed last year. A bipartisan law signed by the president is really fundamental to this business, right? And there's a reason the U.S. Was sort of behind the rest of the world in tokenization in general, and commodity tokenization was basically there wasn't a regulatory framework for issuing these tokens and being able to be treated like a commodity. So now the Genius Act sets that framework. It was really focused on dollar stablecoins, but the framework applies to all forms of stablecoins, whether they're commodities or other types of financial assets that are getting tokenized. And really what it does, it sets a very similar custody and trading framework that ETFs have today. So basically it governs how you have to back whatever coin you're issuing one-to-one with whatever the underlying asset is. So, we have to, if we sell 1 barrel's worth of a token worth of oil, we have to buy 1 barrel and then put those into our custodian. So it's back one-to-one. There's auditing standards there's custody standards. There has to be a US regulated custodian holding the underlying assets that's freely and transparently auditable so that you as a token holder can see, first of all, you'll see in real time that your token is backed by the assets. And secondly, there's an audit function that is performed by an independent auditor to make sure the assets line up with the tokens. We're hoping the Clarity Act also gets passed. That will sort of increase the transparency around how you can trade and how you can use the tokens, but the underlying structure for issuing these tokens and having them legally regulated by the CFTC, et cetera, are all sort of covered in the Genius Act. So this company was at the idea stage before, in 2024, but really only was launched and funded after it was very clear that the new administration was going to support this type of thing.
And that inflection point, I think, means different things for the producers in the industry as well as for investors that maybe previously were not able to access the industry in the same capacity. So I think maybe we can dig into the two aspects of that. So both the producer side and the investor side, starting with the producers. And I think one of the phrases or one of the ways that you presented that in one of your previous discussions was the walmartization of the oil and gas industry. So I think that's a kind of abstract term. Maybe you could break that down for us and what that means, because I think it does illustrate it quite well.
Sure. So the oil, to basically get exposure to oil as an investor or a trader or basically a retail, wholesale, asset manager, whoever the case may be, is fairly complex today. You have a limited set of tools and they have pros and cons that really don't create oil or gas as a store of value. It's still more an industrial tradable product, right? And the trading rails that exist today, which are primarily futures and derivatives, really are suited for the actual oil company participants, the oil and gas. You're an oil and gas producer, you're an oil and gas refiner, you're an airline, whatever the case may be. There's a whole industry set up, through futures and options and OTC derivatives that do work pretty well for that industry. It doesn't work well as an individual investor or an asset manager that just wants to go long oil as a macro asset, right? As something that you can put in your portfolio and it's going to perform. It's going to have, it's going to trade in certain ways, again, in certain different geopolitical environments, whether there's a war, whether there's inflation, whether one country's economy is doing well versus other country's economy. It's an asset that responds to macro forces, but fairly difficult to trade. And so our token is basically going to be a very simple and easy way to get exposure to oil that doesn't have a lot of the costs and frictions that you do as an industrial trader. You can just put in your crypto account in your wallet. You can sit on it for 10 years and it's going to be worth the price of oil in 10 years. You don't have to, and it doesn't have a lot of management fees or frictions to say roll futures and things like that. It's better beta. We call it better beta than what's out there today. And on the same side, I mean, I think for stable coins to really work and get adopted, you've seen the massive implementation of stable coins backed by the US dollar. And that's really because both sides of the equation benefit. The investor who owns a stable coin, these are folks who have potentially living in a country with an unstable currency or have a lot of costs cross border or basically have difficulty accessing dollars, and they're very, very happy to own stable coins because the alternative is either costly or risky. On the other side of the equation, the US Treasury or community banks or whoever is providing that backing to that stable coin also benefits from that capital. So there really has to be a two-way bargain for these things to be successful. And we feel we've come up also with a very similar sort of two-way bargain in the oil and gas tokens, where an investor gets better beta and the oil companies benefit from the working capital that those tokens, that the investors are providing by purchasing those tokens.
Yeah. I think that latter point is definitely where we should go, because I think that, just broad strokes, one of the more complicated components of the tokenization of commodities for oil and gas, for example, is the flowing nature. And I think that is one aspect of what you guys have done with the technology, is that you are tokenizing the flow. And so I think maybe if you can illustrate what the technical side of what that looks like, and maybe also emphasize why this is an interesting opportunity for previously unmonetized supply.
We categorize flow basically as inventory in, like, let's just take the United States, DOE stocks of crude oil, which is published by the Department of Energy every week. That's approximately 400 to 450 million barrels if you look at the last few months of reporting, plus the oil that is in transit, primarily owned by upstream oil and gas producers from the wells to market, which is probably another 100 to 150 million barrels. So the total available flow to substantiate oil tokens in the U.S. is somewhere between 500 and 600 million barrels, right? So a lot of oil that is permanently in the inventory of the energy industry. And it's not there because they're trading it, because they're speculating it. It's there because oil is it's essential to the functioning of the industry. So basically, to transport oil from point A to point B, you need to have a pipeline that has to be full of oil at all times. You put oil in the inlet of the pipeline one day, and 10 days later, the oil shows up in Houston, Texas, for example, right? So there's a lot of oil and then you think about refining companies, they have feedstock for their refineries that they will keep on site, and oftentimes it's multiple months, 60 days, 90 days worth of supply, because they know they've got to keep refining oil, even if there's a disruption in their purchases, because, people need to drive to work the next morning. Ambulances need to be full of diesel to rescue people and fire trucks need to be always full of gas, right? So there's a reliability aspect that creates a lot of permanent inventory in the US, and we're going to utilize that inventory to substantiate the token. So obviously, if there's 500, 600 million barrels of oil, there's a lot of running room in terms of utilization of that commodity to back tokens. You think about the size of the industry today. The largest commodity tokens are the two largest gold stable coins, and they are probably cumulatively around $6 billion, right? So we've got a lot of inventory to work with before we even come close to tapping out the U.S. inventory. And obviously, we're also planning to move to an international coin based on the Brent index, which is sort of the international benchmark for oil trading, and that unlocks inventory, outside of the U.S. So there's a lot of room for these things to grow.
So you have as you said, you have the barrels that are in pipes, and you've got barrels that are going to be in storage. You have kind of your minimum capacity that's going to not really change in storage. And so, say, just for the sake of numbers, 500 million barrels. What share are you guys really talking about here of that supply?
Well, we would love to get to a scale that's commensurate with those gold coins, in the next couple of years, right? We could, if you had, say, 50 million barrels of storage, that's getting you, north of that. So there's plenty of room to run. We are sort of creating a bank of oil, right? Because the investors are going to be buying a token that's going to be backed up by a bank, which is an association of oil companies that all have a lot of oil on their balance sheet, that are high quality companies, that the investor knows those companies are going to be around for a long time. The oil majors, large producers, things like that. And, as we were sitting in your offices last week in Houston, the most logical place for that is Texas, right? So probably within, let's say, 60 miles, there's just enormous storage facilities with a lot of oil, with a lot of the major midstream companies and exporters and things like that. So it's a logical place to basically start the business, and it's a logical place for, we really hope that the United States and Texas is kind of at the forefront of this business, setting the standards and basically putting together all the pieces of the puzzle so that this can grow internationally. We want the U.S. and the benefits from the best rule of law. The private sector oil business is second to none, and that will then build across the world.
And so for the producers, I think walking me through and the listeners through why this is particularly interesting. So say I'm producing 1,000 a day, and I'm curious how I can benefit from tokenizing maybe a share of what I have available.
Sure. Yeah. And producers, like oil producers, come in all shapes and sizes, but most of them have, a time lag from the day they produce that oil when it comes out of the well to when they actually sell that barrel, and it sort of sits on their balance sheet, and it's working capital that is very hard to monetize today. They typically, smaller producers typically finance themselves based on their reserves, and other producers, have multiple sources of financing, but they typically don't have sort of efficient and cost-effective ways to access that oil that is just sitting in tanks, in pipes, at their storage units, on the leases, et cetera. And so we basically can purchase that oil from them, and as long as they keep their overall inventory fairly constant, we're very happy to continue to use that oil to substantiate tokens, and they can basically convert working capital from crude oil or natural gas into dollars and redeploy those dollars back into their business. For upstream companies, it's a new form of capital. You know, the we've been talking to oil companies who traditionally, a CFO looks at how much equity am I raising, how much debt am I raising, and those are the two main sources of capital that they use for funding their businesses. And this is a new form of capital that's neither equity or debt, and allows you to just fund your business more efficiently. And it wasn't really on anyone's radar screen 5 years ago because it was small. There wasn't really a lot of capital available. Nowadays, I think it was maybe 5 years ago, there was a 300 billion max in the in the world of this stuff. And now, if you look at different estimations in the next 5 years, blockchain capital is going to go somewhere between 3 trillion to 16 trillion. Those are different, like McKinsey and BCG and things like that have different views on how quickly it's going to grow. But whoever's right, it's going to be very, very large and become competitive in scale and scope with debt and equity financing.
And you guys are not, as you mentioned, stopping with crude. You're also going into other energy commodities. And the next one you mentioned is going to be natural gas.
Yeah, Q1 26, we're really focusing on WTI Coin, and just getting it fully out and growing. And then I think Q2, we're launching the natural gas coin based on Henry Hub, which is the largest US index. And the nice thing about that is a lot of the suppliers basically have both oil and gas, right? So a lot of companies, whether you're a midstream company or an upstream company, you have both oil and gas integrated in your business. So the same documents, the same legal structure, everything will work for gas as well as oil. And we'll see. I think that the oil market is a little bigger than the nat gas market, but the nat gas market is a little more volatile and is also very linked into the massive rollout of data centers and AI. So it's got a lot of interest, not just from investors, as well as from the tech sector and things like that. So we think it's going to be very interesting to see how that rolls out, especially when you look at the massive, the huge backlog of gas turbine fired power that is going into funding to powering data centers.
As we kind of briefly touched on last week, the data center capacity or gas-fired generation in development for the U.S. So that includes announced pre-construction and construction capacity for gas-fired generation is about 253 gigawatts for the U.S. So how much of that ends up coming online, TBD, but I think there's a decent chunk of that we'll expect to see 2026, 2027, 2028. So I think the timing, particularly for this more tech-centric role in the industry, is definitely interesting and could play a role. One thing on the coins that I suspect is frequently asked question for you guys is a little bit on the mechanics of the token itself, because say for crude you have the benchmarks like WTI or Brent, but the true spectrum of crude qualities is so broad, so wide. Maybe discussing how that comes into play for a WTI based token, and maybe from the producer, how they can start thinking about, my barrels are going to be potentially playing in this environment as well. What does that mean for me and my quality?
Sure. One of the major innovations we've sort of achieved here is making oil a fungible financial asset, right? So as many of your listeners know, there's different types of oil. There's different chemical specifications. There's different geographies in the oil industry. A barrel of oil in Kansas is worth a lot different than a barrel of oil in Houston, Texas. A light barrel is worth more than a heavy barrel. These kind of things come into play on the industrial side of things, but investors don't really care about that. They just want to see, they want to own an asset that's basically oil, and they don't really care what the exact specifics of it, who's buying it that day. They want to know what that barrel is going to be worth long term. And so the way we have sort of solved that problem is basically we're treating barrels financially like WTI. They're all WTI. There's not a physical arbitrage in this, but but we will adjust the sort of eligibility of different oil companies based on how much oil they have and what that grade of oil. So like a Canadian producer or a producer with that say is worth $20 less than a Texan barrel is just not going to be able to sell as much oil into this platform as say a Permian Basin producer that produces exactly WTI, right? So we're really handling it from a sort of an onboarding and a credit review perspective. Again, the different grades and what the geographical basis spreads and things like that. That's for the physical market, really. Whereas a financial investor, they just want to know, again, kind of walmartization, democratization of oil as a long-term store of value. It needs to be fungible, it needs to be simple, and it needs to be a kind of a universally recognized asset to be valuable for investors.
So all that work is done up front. Those same discount factors are going to apply, but it's all taken care of before it even becomes the token itself.
Yes,
Tying that back to
exactly.
WTI. Yeah. And so for you guys, kind of looking ahead to 2026, what are some of the next steps? What are you guys looking forward to, and how can folks really start to pay more attention to what you guys are doing and maybe start to participate as well?
Yeah, so we've been really working on sort of structuring and getting all the legal aspects and the tech aspects out there. It's all done now. We've issued our first tokens. They're going to begin trading this week, I think, assuming everything goes to schedule. We're all going to go to the NAPE conference next week, so we will see a lot of our suppliers and investors, et cetera. And then it's really about just growing the oil platform, right? Where basically it takes a lot of education, a lot of, we have to work people through the different aspects of the coin. There's new documentation that we've tried to keep is very, very similar to very oil standard documentation like GTCs and confirmations and things like that. It's all based around physical oil trading, but just with the adaptation that it goes into a digital receipt versus a tank, right?
Mm-hmm.
So really, then it's about deploying this, and adding to the list of companies who are interested in suppliers. And I just, we have a website, and my contacts are on there, and energysubstantiation.com. You can get in touch with us, and we will be, again, we're always available. We have some part of the team in Houston and part of the team out here and in California, and we basically available for calls and meetings to walk people through it. We understand it's a little bit different. Got to understand how the trading works, how the tax and accounting works, all that kind of stuff. But if you traded physical oil or you've done hedging for your company, it's easier than that. So
Yeah.
we try to
Yeah.
make it very, very intuitive and fairly similar to what oil companies are used to doing today in their regular way business.
Right. And I think emphasizing the benefits to pay attention to just for tokenization in general, the 24/7, 365 type of availability, the efficiency, and several others that you've already mentioned. Definitely an interesting time, and I'm sure we'll have plenty more to discuss. But I think that's probably a good introduction and opportunity for people to reach out to you next week at NAPE and chat more. Will, awesome to talk, and yeah, we'll have to sit down and discuss this again later this year.
Would love to.
Thanks for joining us on the Energy Desk. Please keep in mind this commentary contains our views and opinions and is based on information from sources we believe are reliable. This commentary is for informational purposes, should not be considered investment advice, and is not intended as an offer or solicitation with respect to the purchase and sale of commodity interests or to serve as the basis for one to decide to execute derivatives or other transactions. This commentary is not considered promotional material.